Well, up until Wednesday, we're going to try to analyze as much economic data as we can to figure out, okay, the Federal Reserve's not going to move interest rates at this meeting. We basically know that. What are they going to do in the future? So CNBC, they just interviewed Mark Zandi. Now, he is a bigwig at Moody's rating agency. So I want you to watch this. If you check out down through here, now these are all the feeds that I see all day long, and I watch these things all day long. I keep up on what charts are doing and so forth. But this one was pretty interesting. But after this video, I want to explain to you who Mark Zandi is and what role he played in the past. You'll get it after I show this video and give you his context. So take this with some jest. And a lot of you guys are going to be like, Dan, we're not at 2% inflation and so forth. But hold your comments for now. Let's get to the interview. So take it away if you would.
Ms. Mark Zandi joins us now. I mean, you just heard Steve. We saw what happened with jobs. Why do you think they should be in cutting mode already?
Well, I think they've hit their objectives.
So he's basically saying the Federal Reserve should start cutting rates now because they already hit their objective. Now, give your comments down below if you want to chime in on this. I'll read most of them. I comment back on a lot of them, but that's his take on things right now. So let him take it away.
Sarah, I think we're at full employment. The unemployment rate is notched higher here over the past year. We're at 4%. That's consistent with a full employment economy. And I think inflation properly measured is at target. The harmonized inflation measure, excluding owner's equivalent rent, and we can talk about that if you'd like, has been at 2%.
Owner's equivalent rent, which he refers to as OER. So just want you guys to understand that part of it too.
% now for 6-12 months. So it feels like to me they've achieved their objectives. And if you've done that, then you have to ask yourself the question, well, why do we need such a high rate, 5.5% rate? And, I agree with the folks that say that the kind of the equilibrium rate, that rate which is consistent with policy neither supporting or restraining growth, is higher than it has been historically for a bunch of reasons. But it's not 5.5%. And as long as the Fed keeps its foot on the neck of the economy, it runs the risk of breaking something. And again, why? You've hit your objectives.
Except they don't target the harmonized, what did you say, read X owner's equivalent rent. They target the PCE, and it's not there yet.
It's not, but it's all the trend line suggests that it's headed in that direction. And the only difference between where they are now on the PCE and where they want to be is OER, and that's the implicit cost of home ownership, which is difficult to measure in typical times. It's impossible to measure in a housing market that's as topsy-turvy as it is today. And in fact, in the rest of the world, they don't even attempt to go down that path. So, if you're looking for underlying inflation, we're there.
It's fair, and PCE is 2.7.
So that's what he's saying. He's saying basically, if you take out the equivalents, and I did the report this morning, if you take out the owner's equivalent rent, we're basically right at the point where the Federal Reserve wants. But here's my problem with this young man. He was at Moody's during this. He was a part of Moody's rating agencies stamping all these mortgages as AAA. So let me give you a context. Back into running up to the 2008 crash, you had subprime mortgages out there, and Moody's is one of the rating agencies, and there were several of them. They're stamping all these loans as AAA, AAA, AAA. So you had investors all over the world buying up subprime mortgages. And then that's why it was so catastrophic, because when this market went poof, the whole world went poof. You even had Asia and Europe and everything else. Their markets were crashing based on our subprime market. So that's the context I want to take in. So that's, he was part of Moody's during this time, and it just validates it right here. He is a part of Moody's rating agencies. So let's get a little bit of a breakdown of what's coming up this week, up into when the Federal Reserve announces what they're going to do. Tomorrow we have the consumer inflation numbers. They're coming in year over year, month over month in the core inflation. Core means they strip out food and energy. That's coming out Wednesday morning. The only thing out the rest of this week, Monday, nothing. Tuesday, there's a 10-year auction. And then Wednesday is when the Fed's coming out telling us, what they're going to do. I'm expecting, and the markets are expecting them to do absolutely nothing. But this data coming in is going to be really important. And then on Thursday, we had the producer inflation numbers as well as the job numbers throughout the rest of the week. So the rest of the week, it's from Wednesday on, It is nothing but action packed when it comes to information in regards to the financial markets. So I do want to throw this out there. If you guys are interested, comment down below. I want to take my show and expand it a little bit more, maybe into the financial markets. We can start talking about stocks, bonds, and cryptocurrencies. It will still have a gist of we're emphasizing it on real estate because real estate is the #1 wealth builder in the whole country. And I'm starting to actually having some of the major crash brother. I'm starting to get him on my side. And actually, we are working on mortgage or educational channels or educational videos for you guys to check out. So that's in the works, coming up in the next probably 30 to 60 days. Me and the Economic Ninja are working on home ownership tutorials that we're working on behind the scenes. So check those out. Those are coming shortly. But if you're out there in the market and you're trying to just dissect to say, Dan, can I buy a house in this market? Please reach out to us. The website is therateupdate.com. My name is Dan Frio. I'm a loan officer licensed in all 50 states as well as Puerto Rico. Love to help you if you're trying to navigate the housing market at this time. So check out therateupdate.com, and here's basically everything you need to know about us and how to reach out to us. God bless, folks. Thanks so much for watching. I'll see you back here tomorrow morning, bright and early. Have a good night. Bye-bye.